Welcome back to Edwards Economics. My name's Kalen. I'm a former realtor and I'm here to present to you the case on why the 2025 housing market is collapsing. Now, I'm not here to sound the alarms and scare anyone, but before the end of this video, I'm going to present the foolproof case on why you should be concerned about what's actually going on in the 2025 housing market.
Life update for those who care. I just took my house off the market and I'm going to tell you why. Before I get into this, I want to make sure that I mention I am not an expert. I'm just talking about what I've seen in my neighborhood, okay? I listed my house 23 days ago, and at the time, there were only 2 houses for sale. Both of them had been sitting on the market for a little over 30 days. As soon as I listed, 4 more houses for sale, including my neighbor. And since then, there's been 2 more. I don't like competition, so I took my house off, but that's not the only reason. I started going just a little bit outside of my neighborhood to see how long those houses were sitting. 75 days, 89 days. Your girl know how to take a hint. If houses are not selling and they're sitting, I'm not about to have the house on the market right now. It's just not a good time, obviously. So I started doing some research because I'm thinking I can't be the only person going through this. I ended up finding this article. 2 states where home prices are falling because there are too many houses and not enough buyers. They are talking about Florida and Texas. Now, the experts say that we're not going to have a housing market crash, but it looked like it. So anyway, I'm just going to wait until after the market cools down a little bit and then I'll try again.
Sis, you're going to be waiting. Because they're trying to tell you on the news shows, don't believe what you're seeing with your very own eyes. And I don't know. Some of y'all are going to listen. I know I'm not. If you see it happening, because real estate is hyper local. So what you see happening in your neighborhood matters not to everybody else. It matters to you. But when it's everybody's neighborhood this is happening to, well, we're cooked. We're cooked nationally, all right? Not just regionally, nationally.
The New Jersey housing market is literally insane. So let's talk about this house here. So this house was posted in downtown Red Bank for $799, which is honestly very low, I think, for the area and what you're getting. So it was definitely priced a little below market to try and start a bidding war, which is exactly what happened. So I was following this house. We went and toured it, even though we don't want to buy until like 2027, just to get an idea of the area, the market, kind of like what your offer has to be competitive. So I'm dying to know. I'm like, what is this house going to go for? Who's going to buy this home? It sells for $954,000. So it went $154,000 over ask. And the very next day, I'm like, you know what? I'm so happy for this family or whoever snagged this beautiful home. They're going to have a great life. It is up for rent. Are you kidding me? And the craziest thing about this is for 4.5K, right? If you were to put down a standard 20% on this home and get a 30-year mortgage, your monthly payment with taxes is probably closer to around $6,000. So clearly, whoever bought this is either buying in all cash and then eventually the cash flow will make sense.
100% all cash. Also probably banking on appreciation.
Or part of some sort of large corporation that has access to a lot of capital where it wouldn't really matter. The next day, who is buying up this beautiful home? I was like, you know what? Someone's going to have an amazing life with their family, raise their children in this house, and it is listed for rent immediately. I'm sick. Like, this is why people can't buy homes anymore.
We're launching a new look at the good, the bad, and the instructive in the housing market. Our senior real estate correspondent, Diana Olick, joins us with the results of CNBC's housing market survey. Diana, good morning.
Good morning, Becky. Now, this is something of a sidewalk survey. Each quarter, we'll ask real estate agents from across the country and in a cross-section of neighborhoods just what they're seeing on the ground. Now, here are some of the highlights from Q3.
They should have asked me, because I don't know if these guys are going to be keeping it real. Let's see.
When the average rate on the 30-year fixed mortgage was mostly on the decline, but moved up mid-September. Now, during that time, 49% of real estate agents we surveyed said it was a buyer's market, meaning that buyers had the advantage because homes weren't selling quickly and supply was sufficient. 30% saw it balanced, and just around 21% saw sellers with the advantage. As for prices, 44% said they saw them declining, 38% stable, and just 20% increasing. Now, again, all real estate is local and market fundamentals are therefore
80% of agents, and this is Q3, so this is showing you the trajectory, all right? It only gets cooler in Q4, and I'm not just talking about the weather.
or different based on location, of course. Still, the trend is definitely for lower prices. And 89% of our agents reporting having at least one seller who decided to cut their price last quarter. That really shows how kind of over-optimistic sellers still seem to be, despite all the uncertainty in the economy and a slowing housing market. Now, even more drastic, 40% of agents represented sellers who delisted their homes due to those rough market conditions. So what will we see this quarter? Well, 48% of agents expect the market to improve and 35% think it'll stay the same. Just 17% expect sales to decline. Now, this is just a few pieces of this housing market survey. You can read.
Can y'all see the bias? I'm smiling because it's like, just as a former realtor, everybody's always talking their book. This is why I had to get out of there. I cannot stand realtors. So I became one. Guys, realtors are always going to tell you it's a good time to buy. Oh, it's going to improve. Oh, it's going to stay the same. Come on, y'all. Come on. Do y'all see what's going on? Layoffs? Do we see what's going on with the cost of living? People can't buy these houses. The sellers are still unrealistic. I mean, come on. What are we doing?
All of the results, much more, many more insights on CNBC.com. It's posted right now. Back to you guys.
Hey, Diana, just in usually talking to real estate agents, it's generally pretty tough to get them to admit that it is a buyer's market, that it's a tough market out there. I think the statistics you just showed that 89% of them had cuts and 40% of them delisted. I mean, that speaks volumes about what's really happening there. It's probably an even worse picture than the 50% of them who say that the market's either for the sellers at this point or it's a fair and balanced market.
Yeah, I mean, it's interesting when you talk to real estate agents on the ground, and that's why we wanted to do this survey, because, you know, you look at the numbers from the realtors and there's a lot of indices and a lot of, you know, home price exactly, stuff like that. But it's really on the ground that you're going to hear from them, understand what's going on in their neighborhoods. If you put them on TV, sometimes they're not going to say it, just as you said, Becky. But in this survey, you know, we sent it out and they came back with real answers about what they're seeing. And as you said, a lot of them are very concerned about what's going on, state of the economy. They talked about how their sellers are feeling, how they're afraid to list some of them. So, you know, it's just a good way of knowing what's going on out there without the actual statistics.
But this is part of the problem, right? I mean, just look at the incentives. We talk about an industry where they have a fiduciary duty to represent their clients, right? And they're disincentivized to be honest on the national stage because they don't want to tell people the truth. The truth be told, they don't care whether or not you buy too high or sell too low because they're going to make their money regardless. Them saving you money or them making you a little bit more money on the margins when it comes on a percentage basis with the commissions, it doesn't really matter that much. It's not that much money they're getting in their pockets by helping you get more for you. So it's just a crazy conflict of interest. I know that it's necessary. I'm not trying to poo-poo the entire industry, but I've just seen way too many dishonest actors. And they literally just said on national TV. I can't believe they just admitted that. Oh, they don't want to come on here and be honest about what's actually happening. What? That's what you're here for. Guys, do not listen to the talking heads. Even me. Go believe what you see with your own eyes. You see what's going on in their local markets. It's coming for the nation. All right? Do not believe these people.
So I'm headed to this house right now to take my lockbox off the door, and it did not sell. I feel kind of bad. This is the first time in 12 years. I've been a realtor over 12 years. I've been full-time over 6 years. This is the first time I had to take my lockbox off a door, and it did not sell. And I'm kind of a little bit disappointed, but then again, I'm not, because there's several homes in the neighborhood that I've been keeping an eye on. Now, this is a beautiful neighborhood. I'm not going to disclose because I don't want every agent calling my client still because he wants to just take it off and then try again, you know, next year maybe. But this is a new development. Okay, so the homes here.
Well, that. Why would a buyer go in and purchase his house that already exists when they can go to the builder and get all these incentives because the builders are having the same problems that the sellers are having, which is low demand. The builder has the advantage. They have a new home and they can start throwing in all these incentives to the buyer. They can also afford usually to lose a little bit more money than the buyer. So Yeah, if it's a new development and they bought within the last couple of years, trying to sell, you're cooked.
Here are no more than 4 years old, and there's 2 other models in the neighborhood, single family homes, that one looked like they've been on the market over 300 days. They withdrew this week as well. And another one was like 160 days on the market. We were 60 days on the market, and in the 60 days only got 1 showing.
Wow.
Like, I don't know. Like, I know it's slowing down, but that is very slow.
Yes.
And I can say, I mean, I've listed other homes lately that we got showings, we went under contract, everything went well. It may be just this neighborhood, and it's most likely the price point.
So you guys know we talk a lot about efficiency and value here. And that applies even to how you spend your downtime. I recently tested a platform called Free Cash, which helps users earn real rewards from quick online activities. It's simple to use, and you can complete short offers such as app trials, surveys, or even gameplay sessions. And each one earns you points that you can redeem as cash, crypto, or even gift cards. So what stood out to me is how user-friendly the dashboard is. You can check your progress in real time, and I was able to complete my first cash out almost immediately. Now, I know some of you guys are wondering if this is legit or not, but don't you worry, because Free Cash has a 4.8 star rating on Trustpilot and is backed by over 200,000 verified reviews, which gives this platform, I'd say, some pretty solid credibility. So if you guys would like to check it out, go ahead and use the link at the top of the description box below, or you can scan the QR code that's appearing on the screen. Thank you to Free Cash for sponsoring today's video.
The 50-year mortgage wasn't bad enough. Now they talking about a portable mortgage, and I don't even know what is that? Are they just making up, or is that an actual thing? But I'll tell you one thing, what that tells me is that the market's about to crash, and they're in panic mode. They don't know how to fix the problem, so they just throwing darts on like a dartboard, hoping one of them will stick. How about just lowering the prices of housing?
Can do that. Can do that. It's, again, the financialization of housing. So all the creative financing that happens everywhere else in the financial system is now happening to the most expensive asset that most Americans will ever be able to buy. So now you're competing with hedge funds. You're competing with people that are outside of the country, all these rich people that just love to park their money in American real estate because it's prime. Yeah, you're competing with all of them. Now housing is an investment vehicle. So you get all that competition, and you also get all the creative financing that comes with it. And we saw what happened in 2008 when people get a little too creative with the financing. Banks start to collapse. The entire financial system gets cooked. So when it starts getting too complicated, I don't like it. So I'm not bullish, if you can't tell. So let's talk about the hidden weaknesses that no one is talking about. On the surface, Q4 is looking pretty stable, but the foundation, I'm telling you, is very fragile. Affordability is collapsing as mortgage payments consume 38% of the median home income. That's the worst it's been in decades. And for first-time home buyers, yeah, the record age is 40 years old. This isn't a healthy market by any means at all. It's a shrinking one. Inventory is rising in key states like Florida, Texas, South Carolina, and insurance costs are blowing up budgets. Foreclosures are up 20% year over year. So do y'all hear anybody talking about the foreclosure crisis? Do y'all hear anybody ringing the alarm that the housing market is unstable? Maybe a little, but not so much. Yes, the levels are still historically low, but the trajectory matters. And that's why I think people are getting confused. We thought that the COVID inflation of housing prices was only going to keep going up, or some people thought that. That's not the case. The trajectory matters. Debt loads are increasing, savings are falling, and wages aren't keeping up. And builders are adding to the supply at record rates at the worst time possible in way oversaturated markets. Now, for some of you guys who don't live in these oversaturated markets like Austin, Texas, even like some places in the DFW area where I am, y'all just don't get it. But y'all in Florida do. It's getting crazy. But let's go ahead and steel man the bullish case, because I know there's going to be people out there saying, oh, but Kaylin, homeowners have low rates. Equity is high. Supply is still tight. Okay, yeah, that's true. Those help prevent a collapse. But here's the real issue. Low rates trap people in place. That creates a low transaction, low demand environment. not a strong one. A market can stay price stable while the underlying pool gets weaker and weaker. You don't even feel the crack until the pressure gets too heavy. And that's the case that we're making. So what do you guys think? Are y'all bullish on the housing market or are you a grumpy bear? Let me know in the comment section below.
When everybody was posting about the housing market crashing and it wasn't really crashing, but now that the housing market is really crashing, there is no post about it. Like, you guys, we really need to do better.
The housing market is crashing. Housing is one of those markets that takes a long time to show you it's on a downturn. And that's because the way that houses sell is very different than the way that stocks sell. Where a stock can price itself immediately in the market, people tend to sit in their homes until they go up in value. So what's happening in Atlanta and Nashville and Miami, a whole bunch of other cities that are mostly in red states, is that there are way too many houses for the number of people who want to buy houses. Investment companies like Zillow and other private equity started buying up a lot of real estate investments after 2020. So that trend, combined with people moving to more rural areas during COVID because they could suddenly work at home, and a lot of other factors that have to do with other areas of the economy like the stock market, artificially inflated the housing prices. And now you have a situation where houses are sitting on the market for months and the sellers are eventually pulling the listings off the market. And so the value of the house is going to show the last time it sold. But the true value of the house might be $100,000 less, but I'm not able to sell my home. And guess what? It's in Zillow's interest as a stakeholder to keep those prices as high as they can. There's a number of unprecedented things happening that we won't know what the result of this is until we see it, because there's so many factors in the economy. One of the unprecedented factors is housing prices are leveling off or going down while interest rate prices are being cut. Because usually housing prices go up when rates go down. Also, the price of new homes for the first time in like 40 years is cheaper than existing homes. Different analysts seem to have different opinions on this, but the one that I liked was institutional sellers like builders are more willing to price discount, where someone who has held on to a house for...
I got to add in on that though. They're also not built the same. So you do pay for what you get, to be absolutely fair. They'll use all the buzzwords, efficient. Oh, these windows are efficient. Those windows break. Those windows are like paper. Oh, this home is so economically efficient. This is so environmentally sound. No, those walls are paper thin. So they're not built the same. So even if you are getting it cheaper, it's like, But people like me, we like to get houses a little bit older because you can feel the quality.
For 30 years and it's time to sell it, they're less willing to go down. They think that they should get more. And also, I think we all know that newer houses are made out of ticky-tacky. The realtor made a really good point, which is the housing market has never crashed because of housing prices. It's always been the influence of outside forces like the crash of the stock market or loose lending standards that lead to a whole derivatives market that crashes the entire global economy. But there are a lot of outside factors that are also happening in tandem. One of the things that could happen is insurance rates getting jacked up because of climate change in certain areas. I think about California's devastation and the way insurers are not willing to insure in California. I think about AI job layoffs. I think about the student loan crisis.
The White House has another unique idea to unlock the stalled housing market after floating a 50-year mortgage over the weekend. The administration is now looking into portable mortgages, which would allow homeowners to transfer their current rate from one house to another. So in theory, this would push...
I kind of like that. I mean, as someone who has and has had even lower mortgages than I currently have, I mean, I'd like to keep it, you know. When inflation is as high as it is, the mortgage is actually the asset, low-key, more than the house, especially when you're in a debt-based economy like we have right now.
Homeowners who were locked into a low rate to list their house, opening up more sales. And Katrina, why this feels more palpable to me than a 50-year mortgage is this is trying to at least address the supply side versus a demand side.
I agree with you 1,000%. I think that the affordability crisis is not going to be solved by one policy alone. But I do love this idea of being able to take your mortgage. Like, can you imagine you have a 2 or 3% mortgage, you haven't been able to move, and now all of a sudden you can take that to another property? It will open up supply, as you mentioned.
The banks aren't going to like this, though, because it doesn't benefit them at all. They're making tons of monies when they're getting these mortgages approved, when they're doing all the underwriting. Like, everybody that's involved in that process, they're not going to like the volume disruption that this would cause.
50-year mortgage, I didn't like that idea. I understand that it was just presented as one tool in the toolbox, but ultimately you're paying so much interest. And I understand that the payments are going to be lower per month, but I just don't think that it was the best solution. However, I do commend President Trump and the administration for trying to solve the housing issue. I do think we need to also eliminate red tape. Because so much.
We call it blue tape.
Oh, yeah. Blue tape. Oh, I like that. I like that.
It's never red tape. It's always blue tape.
You're right.
Can I ask you a question? Does it give the portable mortgage, or does it give people who have great mortgages an unfair advantage in the market?
That's an argument.
Because they're going to.
But life isn't fair, Brian.
You're right.
I know. Well, believe me, I know this.
Life isn't fair when you benefit, but I don't know, y'all, because even the 50-year mortgage idea, I mean, people being in debt, I mean, most people are going to have a mortgage for the rest of their life anyway. Most people are moving within 7 to 10 years anyway. So they're always renewing these mortgages, paying off their old mortgage with the sale of their house and getting a new one. So a lot of people are going to have these anyway. So is it that big of a deal? Probably not, especially if it's portable. So you get a 50-year portable mortgage. Just creative financing for, and another way of saying, hey, you're going to be in debt for housing for the rest of your life.
But I'm just saying, so you get to walk out with your 3% mortgage and go bid on other homes. It still seems like if you didn't get the 3% mortgage, you're still going to be at a big disadvantage.
Refi in 5 years.
Is it still more of a demand side thing than a supply? I'm just asking the question.
I know that what your argument is that prices will continue to go up because now those people have more power and they're able to bid up homes.
Yeah.
I get that argument. So, right. But I also get the argument that it's going to open up properties where, think about it, some people who are empty nesters are living in a 6-bedroom house. They don't need that much space. So it's going to open up that inventory for a growing family. So, and again, I don't think one policy is going to be the solution to all, but I love this portability thing.
Now let's talk about the 2025 pressure cooker that is the U.S. housing market. Because the softening economy, plus the high rates, plus the affordability crisis equals the perfect setup for weakness. Rates are likely to stay above 6%, hovering between 6 and 7%. That's what we've been seeing in Q4. That means that the demand is going to be capped because some people simply cannot afford at those rates. Builders continue adding supply in the South and the West, and states with insurance crises will keep seeing forced selling. It's insane, especially along the East Coast. Foreclosures probably won't explode. They've been rising, but they probably won't explode in the way that we're all thinking. But I can promise you that more distress is coming, especially for people who are stretching and reaching just to be able to afford a house in the last 24 months. The job market is shifting, layoffs are rising, and consumer debt is at an all-time high. This doesn't necessarily create a crash per se, but it does create a slow bleed. Fewer qualified buyers, more price cuts, more stale listings, rising days on the market, regional pockets of real pain. This is all a sugar and spice and everything nice concoction for a large downturn. And maybe if it's not national, there will still be regional pockets of pain. But again, let's go ahead and still man the optimist argument, because they'll say, Kaylin, the experts predict 2 to 4% growth in 2025. No, I guess. Or maybe, sure, on paper. But most of that growth is carried by a handful of metros, while large parts of the U.S. are already rolling over. The reality of this is, and I don't care, I'll debate this with anybody, a national crash is unlikely. But a national stagnation, a regional correction, a multi-year affordability drag, well, that's already here. So I'm not sure if that's good news or bad news. It just depends on where you fall on this. But I want to know your opinion in the comment section below. Do y'all think that a national crash is happening? Are y'all already experiencing and seeing regional crashes? Let me know in the comment section below.
What I'm about to say is going to go against the best interest of me as a mortgage loan officer, as well as the rest of the real estate industry. If you are a buyer and you are looking to make offers on houses right now and into next year, lowball these. Lowball the out of these sellers. If you see a house and you think that house that's listed for $500,000 is only worth $400,000, a lot of other people probably think that too. Y'all got to stand firm and stand strong, because all I hear all day long up and down my timeline and on the phone is that house ain't worth that. So the ball is in your court. How much is that house worth? As a collective, the only reason why houses cost what they cost is because there was a collective of people 3 years ago, 4 years ago, 5 years ago that said, yeah, I think that house is not only worth $500,000, I think it's worth $550,000.
Look, I agree. That's how the market works, y'all. And look, I bought my house in 2020, moved from California, bought in Texas. I bought at the top of the market. So hear me when I say this. I am talking against myself. I was a realtor at the time. I'm talking against my own book. Lowball them. These houses ain't worth what they worth. Nah, I just had to pay what I had to pay. I don't care about being in negative equity. I don't care. Don't play yourself.
How do I say that? The reason why I say that, as a person that currently owns a home, owned my house through the pandemic with the 3% interest rate, is because the market has shifted. It's a buyer's market. Act like it's a buyer's market. Take charge. You have to understand that the people that's coming behind you in the next 5 years, the next 10 years, they're counting on you. Now, I'm not saying lowball them so bad to the point where you get laughed at, but what I'm saying is we have to get these prices down.
Right. And you never know what people are going to accept. It's like, going to a yard sale. Like, one man's trash is another man's treasure. One person's lowball, terrible offer, it's a non-starter, I'm not even listening to you, is another person's highest and best, and they'll accept it immediately. You never know. You always got to try. I love shooting my shots. The worst they can say is no.
To allow accessibility to the next generation. You know what? Normally I say don't offend people with your offer, but that offend them. Because remember, real estate is a cycle. These people that's selling are the same people that outbid you 5 years ago. They're the same people that locked you out of real estate 5 years ago. They're the same people that said that your FHA offer wasn't good enough. The same people that said that your VA offer wasn't good enough. So yeah. Get back as a man.
Forbes media chairman and editor-in-chief, the one and only Steve Forbes. Steve, welcome to the show.
Good to be with you. Nice to see you.
So nice to see you, as always. You heard some of the comments from Bill Ackman. What are your thoughts?
Well, what they should do, but won't do, is break those entities up into several pieces and allow the private sector to reemerge. Since the bailout, and that's what conservatorship means, the bailout 15 years ago, what has happened, instead of really reforming these companies, what they've done is push out what remains of the private sector. About 85% of the mortgages now, one way or the other, attached to the government, whether it's Fannie, Freddie, the VA, Federal Home Building, Federal Housing Administration, FHA. And so we got to get some private enterprise back.
Would that be like the baby bells?
Yes, but even better than the baby bells, because innovations, for example, you mentioned the movable mortgage in effect. That should have been done years ago. We have these 3% mortgages out there, which frees people in their homes, hurts job mobility and the like. So why can't you have a portable mortgage where you can take that mortgage to your next house, and assuming you qualify and all that good stuff. So there are a lot of innovative things that can be done. And one of the things I hope the administration will be doing to help bring housing back a real market is contrast what it takes to build a housing development in a place like Texas or Georgia or Florida versus California. In Texas, you can get a project approved within weeks. California, a lifetime.
Yeah, truly.
Everything that the government has ever done in housing has screwed it up for people, I would argue. That's what's made it so unaffordable in the first place, is the fact that you get hundreds of billions of dollars in government subsidies to own a home, mortgage interest deduction, property tax deduction, the Fannie Freddie backing for cheap mortgages. You mentioned the Federal Housing Administration, VA loans, which does have actually transferable loans for veterans. But the only thing that will make it affordable is for home prices to fall. And I know, so Zillow came out and said 53% of homes, so more than half, lost their value in the last year. That is the biggest percentage since 2012, the end of the last housing collapse. I worry that the government will intervene and try and prop up those housing prices rather than letting them come down, which would open up the market to all the people who are upset about affordability and being forced to rent rather than own.
Well, homeowners may take a different view once they buy a house to have it go down in value, especially with a mortgage. And we have to remember, since 2020, housing prices, median housing prices, have gone up 45%, far higher than the rate of inflation. And so the way we deal with this thing is really, it sounds Pollyannish, but the only way you deal with it is, in addition to these reforms in the market, make it easier to actually build a house, is higher wages, a booming economy. And that solves a lot of problems. And getting these Fannie and Freddie and these neo-socialist communist entities out of the market, because they do end up screwing it up. Fannie Mae and Freddie Mac, even after the disaster of 2000.
Yeah, I mean, I get his point. These economic benevolent hands that are always in all of these markets, they just apply a little too much pressure sometimes, and it just throws everything out of whack. In a free market, you don't necessarily need these benevolent hands doing anything. We don't need any social or economic engineering happening at all. Let the market do what it's going to do. But people don't like to deal with pain. They also don't like to delay gratification. So you have all these programs, you have the Fed stepping in and doing stuff with interest rates that just throws everything off. And now we have the problems that we're having right now.
They lowered standards, lowered down payments, and then increased the amount you could guarantee through Freddie and Fannie, which drove out the private sector. So how about a little bit of real free enterprise, both nationally and locally on zoning laws?
They're under incredible pressure, politicians and everybody in government, from realtors.
So here's the bottom line. The housing market isn't necessarily collapsing as some people might sensationalize and may think it is, but it is quietly weakening. And the pressure, it's only building. Affordability is shot. Demand is thinning. And the major regions are softening fast. If you're buying, you need to be patient. And if you're selling, well, you're going to need to be more realistic than ever. If you're investing, run the numbers like a good steward and not a gambler. This is not the time to be messing around. So if you guys enjoyed this video, go ahead and give it a like and subscribe to the channel where I can keep you guys informed on everything that is going on. Thank you guys for watching today's video. I pray the Lord blesses you, that he keeps you, that he lifts his face towards you, that he turns his countenance towards you, that he gives you favor, and that he gives you peace.